Urgent trade alert, December 7th, 2022. Massive deflation wave incoming. We've got a CPI and Fed announcement next week, Tuesday and Wednesday, and this will move markets. Expect us to get even more aggressive Tuesday if the CPI is falling, which is what I'm expecting. Crypto and the long bond gets you rich in 2023. Now in our portfolio, we're making big money on BOIL, TMF, and a little bit on UVXY today, while we see a little drawdown in the rest of the portfolio. And good thing is that represents about 70% of our assets currently in both strategies. We've been recording some massive profits. We just took a 68% profit on NRGU. Our high risk portfolio has a total return of 11% this year. Our safe growth portfolio was up 31% in October, 11% in November. We recommend you buy these 5 stocks now to make the most money possible. This is what 1 unit of investment looks like following our strategy. Now, if you're a paid member, you get access to the membership area where you can type in exactly how much money you want to invest. So we'll go back to that later. But let's jump right now into what 1 unit in a high risk strategy is looking like. So you can see the Treasury's position has grown to 49% of the portfolio. For every $1,966 following the system currently, you should own 19 shares of UVXY, the crash insurance. If stocks go down rapidly, UVXY skyrockets to the upside. 97 shares of TMF. This is the 3-time Treasury ETF. We're betting interest rates fall. I believe they're going to fall until about 2025. And so we're likely going to take some profits off of TMF and roll it into the offense on Tuesday, assuming we get the CPI I'm predicting, which is going to be lower inflation than the previous month. We've got 74 shares of the Grayscale Trust, ETHE, 1 share of FNGU. These are giant tech companies leveraged by 3, and then 12 shares of BOIL. We're about to see extremely cold front hit Germany and Europe. And if it continues, they're going to be completely out of natural gas by February. So we'll probably be selling BOIL around the $90 mark come February if that plays out. Currently trading at $26 this morning. And right now it's already up to 30. So this is moving to the upside. There's only 3 spots available per day at special pricing. If you want to get a paid membership, call Dean at 505-322-7515. Okay, so let's look at why we're so confident deflation's coming in. The last year we made all our money betting on inflation by being long oil and gas. Now we're expecting exactly the opposite, make money on crypto and bonds. I think it's gonna be about a 2.5-year stretch to the top. This is looking at the M2 money growth versus CPI. And so you can see we've had this dramatic sharp decline in the money supply increases. It's actually gone negative for a tiny bit here. And that's why we have expectation for the CPI to not just fall, to fall off a cliff. Another thing supporting this is that household excess savings, which have been driving the inflation, as well as people being too lazy to go to work. That's really the last chink in the supply chain, is getting everybody back to work. But this is expected to be gone by mid-2023 as people run out of money. They're going to spend less and they're going to go back to work. This can be very helpful for getting the inflation in services and labor markets fixed. Also, if we look at history and you're looking for rare opportunities to buy the dip, almost never do you have stocks and bonds go down together. This is the biggest crash for the 60-40 stock bond portfolio in history. Okay, so usually stocks go down, bonds go up. The only time that was anywhere near to this was heading into the Great Depression. And again, if you bought the bottom or into a great sell-off, the next several years were always extremely positive. This is a great time to put all your money to work right now. Okay, here's gas. You can see it's been going straight down. Now there's some worry that if the SPR release is going to have to stop, that this trend could change, or if China were to aggressively reopen, that this could change. At this point, they're still dumping the SPR and China's not reopening, and the trend is for commodities to be falling. We're only long BOIL because of a special circumstance related to blowing up all the pipelines from Ukraine to Germany and Europe to supply gas due to the war. So as you can see, gas is heading down. If we look at Chinese exports and imports, both of these are falling. We look at freight rates from China to the US relative to goods inflation. You can see it's been falling off a cliff as well, expecting at least the PCA goods inflation to continue falling rapidly. Now, the data that has the market really questioning itself are all these supposed strong labor market gains. The reality is it looks like there's been no labor market improvement for about 6 months. And so we have a completely different picture from the established survey job versus the household survey. And what's funny is every time we're heading into an election, these numbers tend to get off track. So we'll show you those examples in a bit. But my expectation is we're going to see that there's been very little labor market growth, and that what we really need is more people to enter the job market to get that wage pressure down. Huge part of the CPI is the shelter in place, about 32%. And so we can see housing prices are falling and rental costs are falling off a cliff as well. Home sales are at the most negative they've ever been in history in the fastest, shortest amount of time. So here you can see the fastest housing slowdown on record. Real GDP, again, we can see the services is stuck in positive territory, but goods and real estate, which are tied to credit and borrowing, have fallen off a cliff to the downside. We believe services will follow. Here's crude oil, also down 39% from peak. Used cars are at a 13-month low, falling off a cliff. So on the inflation front, for the Fed to completely pivot, really all they need to see now is going to be wages slow down, less job openings, and more workers. And again, we believe this is going to be baked into the cake because people are running out of money. Okay, so here's just some examples of fake job data heading into elections, where the household survey was much less than the established survey. We can see it again when Obama was getting his second election. So I don't think that's the appropriate view that we have strong jobs growth. It looks like it's not only deteriorating, but we're going to have lots of layoffs next year and potentially have negative jobs growth, which again will be very bullish for bonds and crypto. TLT posts the second biggest inflow ever. We really nailed it on the treasury market, got in very low price, very close to the bottom. And that's what's been making us money in the very short term over the last month. Now, this is just a chart showing you that central bankers have no idea what their interest rate policy will be in the future. You can see the lines are constantly changing. And essentially, I believe the Powell's going to hike the rates 50 basis points in December, and then probably never again, even though they're talking about raising it another 100 basis points throughout next year. I think the data is just going to turn aggressively against them. Now, the yield curve is so inverted. We haven't seen it at this level since 1981. This predicts high levels of unemployment and a recession 12 to 14 months out. Now, typically during the yield curve inversion can be an extremely bullish period for bonds and tech, especially crypto. So this is actually expecting that we're going to have to cut rates 65% from peak based on a percent change, and back to zero if we just look at how insanely inverted the yield curve is. It's what the bond market's predicting, basically one more hike, and then they're going to have to cut by mid next year. Average time to a recession from a yield curve inversion is about 14 months. It's been as little as 8 and as long as 23. Now, again, we have an inverted yield curve because the Fed has jacked up interest rates into a slowdown in the economy. So I do think they're going to have to pivot very soon. This is looking at the expectations for weather in Europe. Half of Europe will be in a deep freeze by mid-December. And so this is going to drive natural gas demand way up. German utilities published their own gas storage calculation for 3 scenarios. And one of them ends up with no more gas at all by February. So we could be dumping oil for a 200% profit easily by February if we get cold temperatures. Now, if we get warmer temperatures, it still should go up, but maybe not all the way to 90. The highest we've seen in print was 130. Now, again, here's electric prices in Germany, and you can see it keeps bottoming out and then going back to new highs. We're about to see the war ramp up. So good luck for Europe staying warm this winter. And again, lots of money to be made from LNG exporters in the US. And so again, we want to buy natural gas when their supplies are full and sell it when they're nearly empty. Pretty easy strategy. This is a reminder of when to buy stocks based on inflation peaking. In 1942, inflation peaked and you got the bottom of the stock market. 1947, inflation peaked. You had a flat market for a year and a half and then it went up. In 1951, you got peak inflation and then that led to a massive rally. 1970, you had peak inflation. You still got a little bit more of a dip in the stock market, but it came ripping back up as the trend continued. 1974, peak inflation was the bottom. In 1980, peak inflation was near the bottom, and then you got a massive rally. 1990, same thing, nailed it perfectly at the bottom. You absolutely want to be buying stocks, cryptocurrencies, when you think inflation has peaked, not when it's all the way down. Here's a look at money supply. The US is not able to reduce the money supply because they want to grow its deficits. And so you can bet this will be back onto growing the money supply in no time, which has been a key metric for stock returns. Okay, so we're doing a shorter video today, guys. I'm really focusing on how to predict the CPI and what trades we're going to make. So we won't be going through the detailed slideshow that we normally do. I'm going to take a look at our track record. So safe growth, which is a leveraged stock strategy with bonds and commodities to hedge, down 6%. I think we're going to close out the year with positive return and smoke the S&P 500. Our high risk portfolio is now up 13.7% year to date. And I believe we will close out December positive and hopefully hit around a 15 to 20% return for 2022. If we go to the membership area, we'll take a quick look at what we're anticipating for a trade alert. Safe growth, I'm looking at a leveraged gold play to add to it on rumors that Russia could start demanding gold for oil. We're going to add to Bitcoin, GBTC, and we're likely going to be using TMF to fund that. We might top up oil and we might top up UVXY. Expect that trade alert to come out Tuesday. In the high risk portfolio, we're simply going to take some TMF and rotate it into ETHE, FNGU, and BOIL. We've already got plenty of UVXY in this portfolio. So that's the trade alert I see coming down the pipeline. And so now I'm going to take questions. Next week, we'll have the full presentation built. Okay, Bill says we mentioned, yeah, we got into TMF, which is the TLT times 3. Pat says, what caused the volatility? Oil's always super volatile. Rumors that Ray Dalio was exiting all his energy positions in the last 2 days. Bill says he went long some TMF calls and he's doubled his money. Good job. Great. Keith says, what will reverse the sour view? That's when you want to buy it. When everybody hates it, you want to be the buyer. Everybody loves it, start to take profits. Keith says, yeah, it doesn't. The catalyst is that it's a great asset to hold in when there's falling interest rates. So we believe interest rates are going to fall, and the money printing is going to keep happening globally. So as long as those two things happen, debt grows. Yeah, we're getting ready to be extremely aggressive in crypto. been very patient, and that's been prudent. But the time to get extremely aggressive is probably Tuesday. I'd like to see NRGU crash a lot more. It's still extremely well priced, especially with oil falling. I'm kind of surprised NRGU hasn't crashed more. My bet is we're going to sell oil around February or March, probably February, and then we'll probably rotate back into NRGU and hopefully at a way lower price than we have today. We do want to front run China reopening. I don't think that's happening soon. And we do want to front run the SPR running out of supply. Gary, you can get in for a lot less. You can get in for any amount to Rebels. So yeah, I'll tell Dean to give you a call about that. Yeah, absolutely. You guys should sell GBTC, ETHE, and buy Rebel dividend shares. The product just, the SEC blocked. Oops. Okay, I told him to give you a call. So the SEC blocked ETHE and GBTC from becoming an ETF. And there's a massive scandal about how a lot of these funds were trying to make money off the spread or the discount on GBTC and ETHE. As far as the stock market goes, still my favorite asset to give us exposure. And if all the blowups related to this big investment firm DCB or Genesis are resolved, that discount window could shrink, so you could actually outperform Ethereum to the upside. If they don't get this solved, they're going to have to sell a massive amount of primarily GBTC. Coinbase would be an alternative, but they're running a huge loss. But they're going to probably be the last cryptocurrency standing in the US that's publicly traded. So I've considered that as an alternative. And then the best option is buy the real product and then to store it in a cold wallet, which is what Rebel Dividends does for you with leverage. So if you want for every dollar invested to have approximately $2 of exposure, Rebel Dividends will do that and store the coins out of centralized exchanges completely safe. So definitely call Dean if you want to do that. We can take IRA money now. We recommend you sell your GBTC and ETHE positions. We can also accept any type of crypto. Rock says, why did Dalio exit energy? I have no idea why he did. And he doesn't tell us. In fact, he retired. He's not even there. Harry says, are you seeing a gold comeback? Well, there's a lot of central banks are buying it, and there's a rumor that Russia might switch to taking gold for oil. And there's a lot of sneaky reasons they might want to do that. One, they own a lot of gold, so to make their net worth go up if they could drive the price of gold higher. Two, US banks are extremely short gold. So there's a potential to blow up a lot of these ETFs like GLD. So more research there before we pull any trigger on that. TMF will probably be holding till early 2025 as far as the bond market cycle goes. And it should get near a new high, maybe not as high. It took a global lockdown to get us yields where we saw in 2020. So I'm not so sure we get that low, but I think we get damn close to it. George says, if they keep raising interest rates, don't you think there's a lot down? No, I don't. The bond market's already calling bullshit. That's why all the yields are way below where the Fed's telling us they're going to take rates, and the inflation's already crashing. The only part of the economy that's not crashing yet is the labor shortage. But as people run out of money, they're going to go back to work. Then those wage gains are going to go away, and the last part of the bottlenecks are really out of the way. And the price caps they did on Russian oil didn't affect Russian oil, so they're already selling it at 60. So that would have been our other fear, is oil spiking back towards 100 to 150. No, there's no minimum for Rebel dividends. So call Dean, you can get in for any amount. We've got the whole process streamlined. You can add, we've got people adding $500 every other day. Yeah, Bedros, I'm just referring in the last month, TMF has gone up in value dramatically. Warwick, yes, you can buy Rebel with your IRA. We've successfully done that now. Call Dean or text him to learn more about that. We got a lot of people moving IRA funds over now. Yeah, as far as a net total profit from initial trade alert, the only thing we've made money on this year has been Boyle twice and NRGU twice. And then we're hoping to pull off a third win on Boyle with this run. So I'm not saying we've made an absolute profit on TMF, just that that's what's been going up over the last month and has been become our largest position. But yeah, absolutely. There's a big risk in GBTC and ETHE that you can completely get rid of with Rebel dividends, and you're going to get over twice the return. So there's absolutely no reason why you should be in ETHE, GBTC, unless you just don't feel comfortable with us managing that position. If that's the case, then I do think you should stay in GBTC and ETHE. Yes, yeah. We have 2 Canadians currently in Rebel. And unlike most private equity, you're not locked in for any amount of time. You could literally get in today and get out next week. So there's no lock-in period. Yeah, just call Dean. Basically, you wire us money in return for shares, which we calculate on a daily basis. It's just total value of assets divided by outstanding shares. And then you get a weekly dividend. You can automatically reinvest your dividends as well. So say about two-thirds of the people are collecting the weekly dividend, while 1/3 are just having those dividends automatically reinvested into more shares. And you can turn that on and off as you please. And what's really important about Rebel is you're going to own assets that can greatly up. So last time we had a big gain in the TLT in a bull market. Ethereum went up 14%. But these are the other assets we're buying at Rebel with a lot of the cash. Polygon went up 525%. Link went up 400%. Aave went up 900%. Curve went up 310%. So essentially, we're buying the top software applications being designed on the Ethereum operating system. So they're in the same ecosystem. They're not competitive with one another. But the smaller applications have much smaller market caps, so they can grow exponentially faster than Ethereum can. And this is the cycle of the bond markets, which has lined up perfectly with the cryptocurrency markets. So assuming I'm right, peak inflation is behind us, then we're looking at a nice run up to about 2025. Yes, we are going to add to Boyle and sell it around February, maybe March at the latest. Dividends have been very high, so around 1% to 2% a week. A lot of questions today. Very good. Yeah, when we were first getting started, David, we were having those minimums, but now the whole thing is super streamlined. So we're processing several sales a day of different sizes. You know, some people come in with literally 300 grand at once. Others are coming in with $500 every day. So we've been using the dividend to create higher levels of leverage in the portfolio, George. So yeah, the share price has obviously gone down as the bear market has taken cryptocurrencies down for almost a year now, coming up on a year. But the opposite will be true in a bull market. We're extremely leveraged, so this will scream higher. But yeah, we've had no issue delivering a massive dividend every week since conception, and there's no reason to think that'll stop. Now, of course, we do need the assets to bottom out and go up for this to work long term. But so far, it's been very, very consistent. The goal with Rebel dividends is to have income in retirement while giving you leveraged exposure to a growth asset. And so that's what we've successfully done. We're about 86 shareholders. I run the fund with Dean and Ryan. I'm the one who has all the money and make all the trades. Ryan does all the dividend payments, processes all the sales, and then Dean is your go-to guy to talk to about buying shares or any type of question. There's also a weekly webinar, which is hosted on Tuesdays. Okay, very good. So Tuesday's a big day. We're expecting CPI to fall. If the CPI is falling, expect us to rotate into BOIL, GBTC, ETHE, GBTC, maybe gold. My only concern with gold is that the whole strategy Russia has could be to blow up products like GLD. So I'm not so sure if that's the smart way to do it. If the CPI is not falling, bonds are great, and the VIX is even better. So if the CPI is nasty, we're probably going to see immediate sell-off in stocks and crypto, and a rally in bonds, and a rally in the VIX. I think the majority of the FTX pain is behind us. My main concern now is about $1 billion locked up in GBTC that could be liquidated by Genesis. Call Dean to get the share price. I don't have it on me right here, Bill. But yeah, this is time to get very, very aggressive. Bear story for BOIL. The war ends and they fix all the pipelines. That's not going to happen. Russia's about to send 500,000 people and blow the shit out of Ukraine. Ukraine is screwed. They've taken out half their energy. Yeah, I mean, they destroyed the 2 pipelines. It looks like US, UK blew up all the pipelines so they could make sure the war doesn't stop. Yeah, our worst case for BOIL that's realistic is really warm weather over winter. That would be the worst case for us. As far as the war ending, absolutely don't think that's going to happen. As far as pipelines getting reopened, they're not. They're blown up. So either there's warm weather or the war ends. That's the only real downsides for BOIL, and then that are very threatening to us. I mean, they just made Zelensky Time magazine. So I don't think that the U.S. has any intention to give a single inch of Ukraine to Russia. So I'm afraid this will continue. Yeah, I still like F&G a lot. Qatar is putting together a plan to send natural gas to Europe in 2024 or 5. It just takes a long time. Shipping natural gas is extremely complex. As far as we're concerned, we're selling in February. That's when seasonality should be getting those levels down. And if it's really cold, we make a lot of money. If it's not so cold, we should make a little money. And then if we get a bigger sell-off in NRG, I'd love to get back into it. But the decline in the stock valuations has not matched the decline in the oil prices. So I think you have a lot of downside risk in NRG currently. Yeah, we still have triple Q in the safe growth strategy. Yeah, so basically for natural gas, we're expecting that the Europeans are going to draw down their storage as weather gets colder, and we're going to sell it around February. I just wouldn't read into it too much beyond that. That'll probably be late February, early March. Watch, let's go look at this is the utility company's projection. So as you can see, depending on the weather, they have 3 different looks. The bottom on all of these, somewhere around March 1st to the end of March. So you can see they either hit 60% drawdown, or excuse me, 40% capacity is drawn down out of their total capacity if it's warm. If it's cold, they could be at 0 by February 1st. TMF we want to hold for the whole cycle. So the bond cycle is this. So early 2025 is when I expect yields to bottom out. So the big play over the next 2 years is crypto and bonds and tech stocks. In the short term, we're worried about commodity spikes due to supply shortages. Now, if the Fed gets too dovish here next Tuesday, commodities could rip too. So now if they get too hawkish, we'd expect commodities, stocks, and crypto to fall, and only bonds and the VIX to go up. Because then we're going to think the bond market already thinks the Fed's going to over tighten and crash the economy. That's why bonds are not behaving to the forward guidance of the Fed anymore. I don't see an opportunity to short energy currently. Although I do think NRG will fall for a new buy-in. George says, how about the PPI? The PPI has been falling. That's one reason why I'm quite sure the CPI will fall also. But yeah, we want the producer price index and the consumer price index to both fall. The only thing that's being sticky are wages, and services. So if you have to pay higher and higher wages, obviously that's going to impact the cost of services. So that's really the last part of the economy that's running really hot. That and super high-end stuff still flying off the shelf. So used cars are crashing hard. However, new cars are keeping the high price valuations. And we're still seeing high-end clothing lines still do very well. So it's really the middle and poor Americans that are running out of cash. Yes, so once again, guys, TMF, you're going to hold till about 2025. The big picture is governments need to drive yields lower to raise debt. No one wants to lend money if they think interest rates are going to rise, because that means the value of the bonds deteriorating. So people like to jump into bonds when it's a good yield, plus they think those yields are going to go lower. They're getting a nice yield every year, plus the value of the bond's going to go up. So bonds are extremely attractive right now and will continue to be for quite some time. And if the Fed doesn't crash everything with monetary policy, then we would expect tech stocks and cryptocurrencies to outperform bonds by somewhere around the lines of 10 to 1. Now, the catch with the bonds is if the Fed does overdo everything, the bonds still go up in value, but everything else crashes. So that's why bonds have less of a potential return, something like crypto. John, no minimum. Call Dean and he'll get you in. We really have the whole process streamlined. So you want to start with whatever amount, we'll get you in. We're processing people every day in all sorts of, a lot of people are using Zelle to send their paycheck over every week or part of it. But yeah, we could take IRA. I would also get out of GBTC and ETHE and replace it with Rebel. A lot less risk to the downside and far greater upside return. Yeah, you can enter as you like. We got this very, very streamlined now. Yao says, did you talk about selling TMF partially to rotate? Yeah, if we get a low CPI, if the CPI is falling, I want to take on more risk into BOIL and ETHE and FNGU for high risk. For safe growth, we'd be interested in GBTC primarily, and we need to top up UVXY a little bit. And FNGU and EDC are also very attractive as well. Yeah, John, the whole strategy is I use leverage. I go to Aave and borrow money against the collateral. So we're able to give you greater returns than just buying crypto itself. And then we issue a very consistent weekly dividend. So the goal is to have consistent income in retirement while giving you aggressive exposure to a high growth asset. So the big thing for you to stomach as a Rebel Dividends investor is that we're going to be issuing you a dividend, even if week over week, the share value has gone down because crypto has gone down. Our goal is to have a massive amount of crypto and catch the big swings to the upside while paying out a weekly dividend. And right now, for every buck you have invested, you have $2.27 of exposure today. And it's not just in Ethereum, it's also in all the altcoins that are designed on the Ethereum platform. So think of Ethereum as Windows. Well, we're buying all the software apps like Photoshop or Microsoft Word or Excel. We're buying the applications being designed on the operating system. And those have the tremendous upside compared to Ethereum. The interest on our $2.5 million loan is something like 1%. John is asking, what does the interest do? Bill says, can we get margin calls for added monies? I'm not, could you rephrase it? So yeah, so with Aave, there's something called loan health. And if it goes below 0, they start to sell some of the assets we've borrowed to improve the loan health. And that can result in extra fees we want to avoid. My main job is to manage the Aave loan health and to be an expert at how to get money through the US financial system into crypto, because I'll tell you, they sure as hell don't like this business model. We've developed a very complex little system to safely get your funds from the dollar into cryptocurrency out of a centralized exchange over to Aave, where we post it as collateral, take out a loan against that to get the leverage. And then we're using the Polygon network to host all our assets. So we have extremely low fees compared to just using Ethereum. So yeah, if you're a big fan of Ethereum and its ecosystem, and you think it's going to go from 1,300 to 13,000, like I do, over the next several years, you really don't have a safer, better way to get exposure than Rebel dividends. It's definitely better than ETHE or GBTC. John says, if I'm doing 70 safe, 30 high risk, which one would you swap out for Rebel? So yeah, I would just sell your GBTC and your ETHE position and then send that money to Rebel and then keep following those two strategies. David says, what extreme conditions? Well, hey, we survived one of the biggest crashes in crypto's history when most of the other players went to zero and went extremely negative. I'm not going to say it's been fun, but we did survive the third largest crash in cryptocurrency history, with every big player getting blown to zero. But yeah, further downside to crypto valuations would cause more pain to Rebel dividends. John, we send an email out daily with the share price and the assets held. Also, the assets are on blockchain. So there's a little link that looks at our address and it shows you a nice breakdown of all the assets. So a big scandal right now is that Grayscale Trust will not provide the address to verify they own all the Bitcoin that they claim. They say, oh, Coinbase has it. And Coinbase says, oh yeah, we've got it. Just trust us. That's not the case with Rebel. You can see every last little penny to the decimal point on the blockchain every single day. But yeah, we send you an email every day and you can get in and out of your position any day. And the worst case scenario would be all the US banks shut us down. I can still send you USDC stablecoin to your crypto portfolio. So we're literally off the grid. This company could completely detach from the US financial system and be perfectly fine. We just have to only accept Bitcoin at that point or Ethereum. Yeah, so but again, I have so many bank accounts set up. We're not worried about that at this point. Marty says, are there extra fees for IRA option? Yeah, we found a special IRA group that likes to work with us. I think it costs a couple $100 in fees to get all set up, and then you're good to go. So it's not a big ordeal. Yeah, mostly you have most of your money in IRA, so this is a beautiful development for us. I think we're going to double or triple the size of the fund just on this news. So it's really. And then, yeah, so if you're doing the IRA route, you'd most likely want to just get your shares reinvested. So you just automatically grow those. And once you're ready to start pulling out your IRA money, you can start using it to get the income. Great questions. Keep them coming. George says, I'm a Canadian and I own a business in the USA and I have a US bank. Is that the best to use for a Rebel? Yeah, I prefer US banks. Lower fees for us because we pay out the weekly dividend to you from Wells Fargo. And they only charge us 50 cents per transfer for a personal account. I think it was $2 for so we just do ACH every Monday. And we've got some people making $5 to $7 grand a week. We've got some people getting $120 a week. So it's all over the place. Yeah, the dividend is weekly. 505-322-7515. All right, guys. Well, thank you for a million great questions today. Do you think we're going to close out the year positive here on both strategies? And so yeah, Tuesday's big day. We should get that data in the morning. Usually it comes in super early, so I'll get that trade alert out Tuesday, and then we'll go over all the details Wednesday. And we are expecting a higher dividend to close out the year for Rebel, assuming the CPI is what I think it is, because it should jump prices up. So good timing. Give Dean a call. We'll see you guys back next week. Appreciate everyone. Thank you so much.